What did Jerome Powell just say? Nothing unusual. In fact, this is fantastic news, and I will break down exactly what he did say, but what we heard today was just fantastic news for potentially the stock market rally just continuing, mostly because think about the catalysts that we have this week. Tomorrow we have the Fed speaking in the House. Today was the Senate. I mostly expect we're going to get exactly the same kind of discussion we had today tomorrow. So really, you don't really have a negative catalyst tomorrow. The next catalyst the market is really going to pay attention to are CPI release figures on Thursday morning, 7/11. That's going to be with an expectation month over month of 0.1, core month over month 0.2, year over year 3.1%, and year over year core 3.4%. So that'll be Thursday. Friday, we'll get our data on PPI. So for PPI, we're going to be looking at 0.1 on the month-over-month, 0.2 on the month-over-month core, as well as Forex trade, and then a final demand year-over-year 2.3, year-over-year core 2.5. So we're expecting sort of soft inflationary data Thursday and Friday, and that's really what Jay Powell here highlighted. We got Fed bingo literally on him being asked what he thinks about the potential that he's going to get fired, which was really just sort of clutch in terms of, all right, classic way to get Fed bingo. But here are the basic bottom lines of what we heard today. The labor market has cooled considerably back to pre-pandemic levels. That, along with the quote that the labor market now seems to be, quote, fully back in balance, it's really interesting. I haven't actually heard Jay Powell tell us that the market is now, or the labor market is now fully back in balance. I thought that was actually somewhat useful and interesting to listen to because it suggests that their work on the labor market is basically done. See, I'm trying to give you what's different here, and I haven't heard that one before. In my opinion, that's bullish, and it's slowly setting up for rate cuts. If we were to expect a July rate cut, we would have had to have seed planting now. The most seed planting we got was from Nick T at the Wall Street Journal, and it was just his speculation. There were no quotes from the Fed or implications that the Fed cared. And we know last week when Jay Powell was talking to Sarah Eisen that we didn't get any kind of indications of rate cuts coming. And in fact, today, we literally wrote down when we were playing Fed Bingo, which is on screen right here, we wrote down, does not suggest when it will be appropriate to cut. We even said no hint of July cut. Both of those ended up being true on Fed Bingo. Not a surprise though. No hints here on a cut means we're really not setting up for a July cut. So unless something weird happens, even if we get a soft CPI or PPI report this week, I really don't suspect we're going to end up seeing any kind of potential for a July cut. It's just not likely, even with a good inflation read. Now, keep in mind, Thursday, Friday are the inflation reads. I want to look at the world interest rate probability. What's up, dude? You just spawned in out of nowhere, bro. World interest rate probability. So the probability right now per the market, Jack, what number is that? What's the probability of a rate cut in September? Tell the mic.
0.745.
All right, perfect. So about 74% chance of getting a rate cut. How about November? What do we got for November? What's that number right there?
1.88.
Okay, good job. And then what about December?
1.978.
Good job, dude. All right, perfect. That's the market implied trajectory right now of rate cuts. I do want to quickly, before we hit some of the other things that Jay Powell mentioned, just really, I have to do this. I have to shout out that freaking rally in Tesla. Let's go. What direction are those mountains going, buddy?
It's up in this morning at 200.
It's going up. That's what we want to hear. High five right here. Let's go right after Jay Powell's done talking. But you started seeing this move right after. I think, honestly, we're clearing the path here to go into 295. I moved to a different strike price. I took a few tendies on some call options that I had. But just this morning, I opened a few positions. If you're not part of the Stocks and Site group yet, where you could get all my buy, sell, trade alerts, no guarantees we can make profit. But we try to. This is just an example of my Tesla call. We opened this one during the meeting. And this one, I think we opened yesterday. yesterday or whatever, the day before. Anyway, I closed both of those to move to a different strike. So let's go. Thank you so much, J Powell. Make sure you're part of the Stocks Insight group. Again, not every trade alert is something you should copy. Can't guarantee you should make money. Definitely, there are times there are down trades. So keep that in mind. There's always a risk with trading. But most importantly, you want to look at how can trends affect your trading portfolio and what can you do with them. Okay, perfect. So let's take a look at some of the other things we heard from J Powell. MeetKevin.com, by the way, for those courses on building your wealth. Stocks Insight comes with the trade alerts. All of them come with the courses, the course member live streams. Okay, so as far as rate hikes, again, reiterated, no likely rate rises. Instead, the more likely path is rate cuts. Something I haven't heard him talk about before was that the Fed talked about how they issued a cease and desist on Evolve Bank, which, if you remember, they're involved with the whole Yada disaster with Synapse. We also, bye Jack, a lot of the similar regular discussion about what we've heard regarding supply and demand shocks, what caused inflation. That's not a big deal. One negative line was we heard, quote, do you agree any deviation from 2% inflation should be addressed now? J Powell said absolutely, which was a little bit more hawkish, but something to keep in mind is JP Morgan's AI model on Powell's discussion indicated that he was, quote, slightly less hawkish than usual. That's really because I think he's starting to transition into, we're about to go into a cutting regime. It's probably going to be November, December. Although you did have at least one politician who aggressively tried to argue that Jerome Powell should not cut before the election because it would appear political. Well, guess what? He's probably not going to cut before the election because guess when the November Fed meeting is? 2 days after the election. Yeah, November 7th. How convenient. Don't worry, we won't be cutting before the election. We'll cut right after the election. Leisure hospitality, I thought it was interesting. He mentioned that you would expect a slowdown in leisure and hospitality hiring since they were so behind that they finally caught up. And he also mentioned that you'd rather see, broad-based job creation. So far, we've had sort of this narrowing in job creation in the market, and that's not super good. And so they're acutely aware of that, which is also dovish. He shut down the idea that corporate greed caused inflation, talks more about supply and demand imbalances, which is the economic answer. He also shut down the idea that corporations, unfairly boost housing prices. Instead, he suggested, look, it's, they're a legal buyer of homes. They're really a small percentage of home buyers. It's a small issue, and his job is the whole economy. He also said that this was an interesting line that I thought was pretty dovish. He said, quote, we see even more risk today than we saw in March regarding unemployment and the labor market weakening. For a long time, we feared the greater risk was not being able to meet our inflation target. Now there's a greater balance between the two. But he also said there was a greater balance between the two in March. The difference is now he's saying we see more risk today than we saw in March about the labor market. So again, more of a dovish Powell here. As far as immigration, I think he gave a fair economic point here. He says, in the long run, immigration probably doesn't affect inflation. However, in the short run, immigration ironically might help inflation because you have more labor, which could reduce wages and reduce the pressure on, let's say, services costs. Now, obviously, that's not necessarily sort of the American answer. The American answer given by J.D. Vance, which is, of course, the political answer, was, oh, well, wouldn't we want wages to go up so Americans can make more money? Yes, that's the American politician answer. Yes, that's what people want to hear. But is that actually better for inflation? No, of course not. So these were very fair questions or answers here by J. Powell. And of course, we need more good inflation data, which a lot of folks expect we're going to get this week. In fact, a lot of folks are looking and saying, hey, you know what? You might want to hedge these inflation reports because we expect them to come in so low. Maybe you want to hedge and go short because if they come in hot, the market could be caught flat-footed. I don't know. I don't think I'm gonna hedge CPI. I mean, if we had a really bad CPI report, I'll just buy puts at 6:30 in the morning and ride the trend. But I don't think I'm gonna, pay the premiums to hedge going into CPI. I'm usually not an event-based trader though, unless it's J-Pow. Honestly, like, I feel like I could read J-Pow like a freaking book at this point, and I'm not trying to like suggest some overconfidence here. I just think my hours in on analyzing this guy are very, very high. And again, that doesn't mean we're always right. But I think it's pretty easy to trade J-Pow, frankly. I think it's, again, crystal clear right now that we're probably going to get a rapid rate decline regime starting in November. My crystal ball today would say we're looking at 25 bips in November, and then every single meeting thereafter 25 bips. So that way you're probably down. I mean, how many Fed meetings do you have? 8 plus November, December, 10. By the end of 25, you'd be down potentially as much as 2.5%, would be my take. Now, that's not the Fed's projection. FOMC schedule, let me see here, because I want to look at their projection. Their projection, wait, let me guess, their projection's probably 4%. My projection at 2.5 coming down would be 5.25, would be closer to like 3% on average, right? They're probably at 4% for next year. They are... Yeah, they're at 4.1 for next year. So I personally think we're going to get more rate cuts than that, and we'll get sort of a consistent 25, 25, 25, 25. I don't think we're going to get any, like, 50 basis point cuts or whatever. But what I will say is, if you don't yet already follow me on X, make sure you follow me there, because I've been yapping about this, not only sending alerts on the calls that I've been buying, but I've also been yapping on X. Tesla stock is about to test the 258 level. If it breaks 258, which I think it will, 295 is the next easy stop for Tesla. So check that out. I've also got some calls printing right now. I'm up 23%, I'm sorry, on $90,000 worth of calls I just bought like 20 minutes ago. So let's go! Again, I send those alerts to everybody in the Stocks and Site group. No guarantees. You got to look at the signal and decide, do I agree or disagree? What you do with your portfolio is totally up to you. It's not designed to copy. It's just designed to be an indicator of kind of where Kevin's head is and emotion is. And sometimes they're wrong. Like, I really thought NVIDIA would be rallying more right here. It's a little flat right now. I'm surprised NVIDIA is not picking up a little bit, but that's okay. My Tesla attendees are way offsetting my move on NVIDIA. Anyway. Thank you so much for watching. As always, let's go ahead and we're going to play the good old disclaimer.
Just close the fucking door. Close the door.
Exactly. And appreciate y'all. Go to meetkevin.com to learn more. Meetkevin.com/mastermind if you want to be part of an exclusive mastermind. Think about even having a one-on-one option there. Not sure yet, so TBD. But anyway, let's go ahead and play this. Thank you so much. Overall, I'd say bullish on the Fed here. Kind of expect some happiness over the next 24 hours. And then if we get a bullish CPI, PPI read, honestly, just up from there, in my opinion. Eventually, we will get bad data, which could be earnings coming up, and that will drive markets down. We are due for a correction in markets. I'm not Tom Lee Perma Bull here, okay? I'm Mr. Flip Flop. Get it right, never forget it. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Tesla keeps going. Let's go. 5 more calls. We're going to 295, baby. Let's go. See ya.
Not advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.